Growth versus value. Which is the better way to invest your money? Now, I might not have all the answers, but I do know two people that are great investors and that have done both. And what we're going to be looking at today are those two investors and their thought process and their gains over the years. So in this corner, we have Warren Buffett, the multi-billionaire that has been around for hundreds of years, it feels like. But in reality, he's very wise and he's been investing as a value investor for quite some time. And that is the reason why he is worth near $100 billion today. And in this corner, we have Cathie Wood, which is a very well known, especially in the last 2 years or so, growth investor. And she has amassed a wealth of near a few $100 million. So quite as impressive as Warren Buffett, but of course she's newer to the finance space. And in my opinion, they are both great investors, which is why I'm going to be putting them in the same ring together. And we're going to analyze what is better, growth or value. So without further ado, let's dive right into it. So let's talk about value investing first. So value investing, as you can tell from the image here, is finding that diamond in the dirt, right? Essentially what people like to refer value investing as is bargain hunting, buying stocks that are undervalued by the marketplace. And Warren Buffett has been a true test of time of doing just that. And that is why he is worth multiple billions of dollars. And Cathie Wood is newer to the scene, as mentioned before, and she is leaning towards more of the growth side. So growth investing is finding that next big thing, right? You're going to be planting those seeds so that way they can grow for years at a time at an exponential rate. Hopefully, that's the idea with growth investing. And a way to define that is buying stocks of companies that are growing fast and will appreciate in price over time. But which is the better strategy? But first, we must remember that Cathie Wood and Warren Buffett both have ETFs that we can take a look at. One of them being Berkshire Hathaway. And this is Berkshire Hathaway Inc. Class A stock. They also have a second Class B stock as well. But I want to take a look at this one because over the last 5 years, as you can tell, today's date and time, it has gone up over 86%. Which is a really, really good return, right? Even if we look at the 1 year, we're looking at an 8% increase, a little over 8% increase in their total valuation. That's pretty good, right? They're not necessarily destroying the market as far as gains go, but they are doing pretty well, right? 8% per year. At 5 years, they're looking at 86%, which roughly equates to about 15 to 20% per year, which is amazing, especially saying how heavy their stock price is. Now we're looking at Ark Innovation ETF, which is their basic one. They do have a few that you can look at, but in the last 5 years, the ETF has skyrocketed over 830%. So that definitely says something about their ability to spot those growth plays. Now, since we looked at Berkshire Hathaway's 1 year, let's also look at Ark Innovation ETF 1 year. And this last year, they pulled a whopping 153%. So if you were to take Berkshire Hathaway's 5 year and you were to compare that to Cathie Wood's 1 year, Cathie Wood's ETF would actually outbeat Warren Buffett's in the last 5 in just 1 whole year. Now, that doesn't necessarily mean that some of the stocks that are in this ETF are already overvalued. This may be the case with a lot of these plays, and we'll get into that in just a second. But that's just something to consider when comparing these two players. But more specifically, let's look at Warren Buffett's value investing, right? The way he invests. As far as Warren Buffett goes, Berkshire Hathaway chairman Warren Buffett has argued that the essence of value investing is buying stocks at less than their intrinsic value. The discount of the market price to the intrinsic value is what Benjamin Graham called the margin of safety. And if you haven't already, go check out the book by Benjamin Graham called The Intelligent Investor. There are a couple of revised editions and a few words from Warren Buffett himself. That is a great read if you're just starting out investing. Now let's look at Ark Invest's approach to investing. So Ark is a global asset manager specializing in the thematic investing in disruptive innovation. The firm is rooted in over 40 years of experience in investing in technologies that aim to deliver outsized growth as industries transform. This is the website. If you want to go check it out, it's ark-invest.com. Great company with a brilliant person backing it. So let's try to answer what is better, growth or value? So growth stocks in general have the potential to perform better when interest rates are falling and company earnings are rising. Value stocks, on the other hand, often stocks of cyclical industries, may do well early in an economic recovery, but are typically more likely to lag in a sustained bull market. And we've seen that last part hold true as now we've reached all-time highs in the market again. But one thing that was a little bit different in this economic recovery is that the value stocks actually didn't perform very well, at least not until very, very recently. And growth stocks, even though they did take probably the biggest hit among some travel industry stocks and other names of, airline industries and that sort of thing. But growth stocks did take an initial plummet as the pandemic did actually hit. Growth stocks ended up recovering well, and some growth stocks, more specifically the stay-at-home stocks, outperformed many of the value plays even to this day. So what you got to think about is that previous history doesn't always paint the best picture for future results. And that is what we're seeing today. And so what is the bottom line? Well, early bets on pivotal technologies have turned Cathie Wood into a rock star investment manager this year, and it's too early to say whether she can sustain this incredible run. However, growth-seeking investors could learn a lot from her strategy and early bets. This is straight out of an article that asks if Cathie Wood is the next Warren Buffett. We don't know. She's been doing great. Personally, I think it's best to know how to do both growth and value investing in order to become a great investor, and not just doing one over the other. So that's my 2 cents on the subject. Feel free to let me know what you think about value and growth investing down in the comment section below. I'd love to hear from you. And if you have any further suggestions on video topics or anything you'd like to see on the channel, feel free to leave it down in the comment section below and I'll go ahead and check it out. I always reply to all my comments. So hopefully you guys really enjoyed this one. And without further ado, I'll see you guys in the next one. Peace out.